All right. Good afternoon, everybody. It is, what is it, Thursday afternoon?
Last time I checked.
Last time I checked.
Yeah.
So I'm Dan Doran. I'm here with Hannah Rumick. We are talking about, what should we talk about today?
I don't know, mergers, acquisitions, a little bit of leadership, a little bit of culture.
How about the reason that integrations fail?
Let's do it.
Acquisitions fail, right?
Yes.
All right. So let's do that. Excited to get this thing started. I've known Hannah for probably a couple years now, 2 years now, something like that. We've talked in the past about acquisitions. I usually work on the front side of them.
Mm-hmm.
You work front to maybe post-closing.
Mm-hmm.
And your perspective is different than mine on deals.
Indeed.
You see the problems that I create and you get to start to clean them up, right?
Yeah.
So that's what we're going to talk about today.
And I love working in concert with people like you so that we can get ahead of
I think we'll get to
all
that.
the things.
All right. We'll try to talk about that a little bit today too.
Looking forward.
So let's dive into this. Usual ground rules apply. We're going to spend 40, 50 minutes working through this.
Yep.
You okay if people ask questions as we go through this?
Yep.
Okay. So if anybody is sitting out there and has a question, pop it into your chat box. I will do my best to moderate that throughout our session.
Mm-hmm.
You don't worry about that. I will worry about that.
Not going to worry about it.
Tee you up. I didn't think you would, but we'll see. We'll see how it goes. So if you have questions, please feel free to ask. We'll probably leave about 10 minutes at the end to do open Q&A. Mm-hmm. If you'd like to hang around, can you hang around for a couple of minutes at the end? Sometimes we have folks that want to do more one-to-one.
Yeah.
So we're open to that as well.
We are.
So without further ado, let's get this party started. Let's start here. Hannah, give us a little bit of background on yourself and your company.
Happy to.
And we'll get into the thick of things.
Yeah, my name's Hannah Rumick. I'm a co-CEO of Conscience Strategies. My business partner and I started Conscience Strategies after both of us had extensive consulting experience, and we were brought in-house to do a turnaround of an organization that had a 99% turnover rate on an annualized basis. And he was working to get himself up for sale. And we kind of set a new strategy and created a culture and turned the business around and looked at each other and we're like, oh, that's cool. Let's do that again for other people. So we created Conscience Strategy under the hypothesis that the people actually matter and they make a difference.
Okay.
And expertise in human behavior is going to drive the business behavior.
All right. So I have a question before I'm going to off-road us before we even get started.
I look forward to that.
Co-CEO.
Yeah.
So what drove that decision? Because I've worked with a lot of companies. I don't remember ever having one where there was a co-CEO. Oh, yeah. And you're the leadership people. We are. So how did that come about and how does that play into your day job?
It was a very natural evolution of the relationship we had built to date. Okay. We had been partners with different titles at the firm prior. Yep. And it just made sense because what she brings to the business and what I bring to the business is like a perfect complement of what drives the business forward. Okay. And so we just were like, let's give it a whirl.
All right. And it's worked out.
Yeah. I mean, it's a part. You've been married before?
Yes.
So
where's this going?
So business partnerships are similar to marriages. As a wise person once said to me, when you get into a partnership, you know all the great that is there. So
this is an entirely different session because
we're not going into therapy.
That didn't work out well for me.
Got it.
So
okay.
I don't want to talk about the rest of your partnership and see where this goes.
Noted.
Definitely,
I really
I've
like my
hijacked the thread.
husband.
Let's get back on topic.
Really
here.
like my husband. Really like my business partner. And we all have our strengths.
We're in it for the long haul. Okay,
yeah.
Got it. All right. So I'm just going to get back on topic here. So you started out with this sort of turnaround project, 99% turnover, which is sort of staggering.
Very, yeah.
Walk me through that evolution and how that actually came to fruition, and then we'll kind of jump into this because we're going to talk about a lot of the failure points and some of the statistics here. Sure. But walk me through that situation a little bit.
Sure. Well, I walked into it once that data point had already been established.
Sure.
So the goal was to reduce that number. Right. And we walked in.
Because you couldn't actually increase it.
I mean, we could have, but that would have been really unfortunate. And so what we did was we evaluated the strategy of the organization. We took a look and said, okay, what are you actually trying to achieve, Mr. or Ms. CEO? Mm-hmm. And how far off are you to that? We then worked diligently to shift the way in which business was being done to this updated and revised strategy. Simultaneous to that, we observed lots of areas where the culture of the organization could be modified or shifted in order to drive what that strategy is.
Got it.
And so my current business partner, her name's Nancy Kaplan, she and I sat down and we defined the culture of the organization. And we were like, okay, like no joke, here are the values of this and here's what that means on a day in and day out basis. We're going to work really hard. We're a consulting firm. We hustle, we drive, top quality, whatever. I honestly don't remember all the elements of the culture that we defined.
There's probably a slide deck.
But I can promise you there was a slide deck, and we then worked for about a month or two to bring the team along to that culture, and everybody acknowledged, okay, these are the rules of the road. Here's how we're going to behave, and we're going to call each other on it if we go outside that. And then similarly, we worked on the financials of the business because that was something else that, the joys of turnarounds, you can't ignore the fact that you're actually trying to make money.
Yeah, got it. Okay, cool. So our theme here, our title is 80% of integrations fail.
Yep.
So let's talk through that a little bit. Let's talk through the statistics.
Yeah.
And we're going to come back and talk about you a little bit. I'm going to skip ahead here.
Yeah, we can go back to this.
We're just going to go to statistics real quick. So when we say that 80% of integrations fail or 80% of transactions fail, help me understand what that means. What's a failure?
So failure is like not realizing your strategic objective, right? So it's not that the transaction didn't go through, the integration, you didn't actually get there. The question is, did you get to where you wanted to go in the time you wanted to go, and how easy isn't probably the word to use, but just how seamless was the integration? Were people eyes wide open on some of the pitfalls that were going to be coming down the road?
Right. Got it. So super interesting. When you're talking about that, you're talking about success or failure from the point of view of the buyer, right?
And the seller.
Well, the seller sold.
Sure.
Right.
But sometimes the seller is still around. Many times the seller is still around.
All right. So let's take this in stages.
Yeah.
At the first layer of this.
Yeah.
Success or failure from an integration standpoint is inherited by the buyer.
Correct.
Right. So the seller eventually, in most transactions, will eventually go away.
Yep.
So this is really an issue for a buyer getting their financial return.
Indeed.
Okay. What are go a little bit further here? What are the failure modes that you've seen, post closing?
I've seen leadership teams who haven't been ready and able to really drive the scale that the buyer is looking for.
Okay.
I've seen teams just totally, the joys of human behavior. Anytime there's a change, people tend to get really fearful and anxious.
Yep.
And that can manifest itself in all kinds of fun behavior patterns, and so it can lead to tension between two different teams. We've seen a lot of people in their workplace have their work kind of pods and the people with whom they work, and then you go through an integration and you potentially have to make new friends.
You break up the pod,
and you break up, and so then you're
breaking
dealing
up
with
the band. Yeah,
you're dealing with the fallout from that and tension. So I think those are probably some examples.
Okay.
And then I can promise you the people on the call could probably tell us 500 others that they've experienced through life, because my favorite part of this conversation is when you start out, every single person you talk to will tell you their war story of going through an integration.
Yeah, I bet. So take it a step further though. If we have a poor integration, what happens? So what? Who cares?
Last time I checked, people buy companies in order to increase the value of the total picture. So from our vantage point, if you're going to erode the income you could make in the period of time you can make it, why? Right.
So really where we get to is the financial impact.
Yeah.
The failure mode, there's a lot of proof points of how the thing has failed, but the results comes back to, first principles. I bought the company for a specific financial outcome.
Correct.
And that is what has failed.
Correct.
So all of the people stuff, all of the culture and leadership issues have manifested themselves in this financial way.
Yes. And we tie it back.
Okay.
That's the fun part.
Oh, let's talk about that.
Okay.
How do we tie it back?
So we'll take that leadership and we'll take the culture assessment and we'll put a numeric value to it so that an investor knows here's the risk that you have or the reward.
Okay.
If you want to invest a little bit for an outsized reward on the back end, here's why.
Interesting. And if we haven't gone through that process and now we are post-transaction,
Yep.
and it's not going well,
Yeah.
our timeline to have a return on that investment potentially extends.
Correct.
Right. So if we're assuming, like, the classic thing is we assume some sort of synergies in the transaction, right? So we're going to price at a 7x multiple, but to get our IRR, we have to have some sort of synergies priced into this.
Correct.
If we don't meet synergies,
Then
our ROI
you're not
is
going to get
pushed out.
correct.
Right. Interesting.
Yeah. You either will not actually realize it and then you'll work to spin off and figure out how to recoup as much as possible.
Yeah.
Or you'll invest a bit and then perhaps you'll meet your timeline.
Yeah. So let's talk through this. One of the notes that we talked through is culture clash. And I imagine two teams coming together, and one is a type A team, one is not a type A team, or whatever. We have a bunch of quants and we have a bunch of non-quants, or whatever it is.
Or the innovative team, and you're buying them for the innovation, but you're a very structured and organized, relatively large organization that's got your systems and processes in lockstep. And, oh, by the way, these innovative people do things the way they want to do it.
Right. So I worked on a transaction. We'll do war stories. We can do war stories?
Yeah, please. Okay. I love the war stories.
So I worked on a transaction the last few years. It was almost exactly this. A bunch of super nerdy quants and Big Co.
Yep.
Big Co is buying the nerdy quants.
Yep.
There was a really good reason for this.
Sure.
Super innovative company that moves the needle for Big Co. I think anybody, even me, could sense that the culture of these two companies had a mismatch.
Riding with the wall.
So from a financial perspective, Big Co still says we need to do this deal. Post-closing, somebody inherits this problem.
Yeah.
What do you do?
What does that person do?
Well, what do you do?
Oh, I come in and I work hand in hand.
I know, you come in and fix it. Tell me how.
It all starts with defining the objective. Are we all in line and are we all aligned with whatever that objective is? Let's make sure we're all crystal clear.
Okay.
2, the joys of integrations. Words matter. We make sure that everything's defined from a cultural standpoint. Does everybody agree with whatever the definition is of whatever it is we're talking about?
Okay. So the deal closes.
Yeah.
We don't agree.
Right. And
which I think happens a lot. So I was talking to somebody earlier about this.
Yeah.
What I see from my sell-side investment banker standpoint is deals are driven by the generally senior leadership and finance.
Yep.
Right. So there's a deal champion, CEO, founder, whoever that might be, depending on size of company.
Yep.
And the finance folks that sometimes drive the chain, also just back it up and make sure that the numbers work.
Yep.
But I want to get this deal done.
Sure.
I close the deal.
Congratulations.
Great. I feel super awesome about this, right?
Yep.
But now there's a problem.
Now there's
and
a bit of
I
mud
hand
on
that
the
off
ground.
to middle management and HR.
Yep.
How do we start to solve for that? We knew that there was a cultural problem beforehand. We knew that we're still going to do this deal because it doesn't rise to the level that I care, that I'm not going to derail this thing.
Yep.
What happens? What's our playbook for that?
Oh, it's the step-by-step small shifts to drive the big change, right? So what we do a lot of is we'll talk to a whole lot of people.
Yep.
You hear, the trick is making sure people feel heard, because generally speaking, there is anger or frustration or confusion. I'm sure you could come up with other words to describe some of the sentiment that's in an employee base.
You said it nicer than I did, but sure.
I mean, you can throw out whatever words you want to throw out. Trying to keep it diplomatic. And we just start talking with people and we start to look for the trends and we listen for the anomalies in addition to kind of what are some of the themes that are coming through. Okay. And then we'll start to stitch the puzzle together in a way that's going to drive, here from an operating model are some things that you can do. Here from a structure standpoint, here are some things you can do. Okay. Here are some ways that if you just did these 1, 2, 3 quick wins, you're going to make some people very happy.
Okay.
And it's a matter of kind of connecting the dots and creating the puzzle to drive those, like the small changes that's going to help people feel like, oh, people are listening to me. That's so amazing.
Yeah.
That kind of sentiment.
So you may or may not have this experience. Back to my example, Big Co, Baby Co. Big Co often does not want to change.
No, of
right?
course
Like
not.
you have to fit in my box.
You betcha.
So when you go through that, like find the small things and
Sure.
find the themes and work through those thematic elements to make changes.
Mm-hmm.
Who's changing?
Big Co. No, Small Co.
Right.
Yeah. Small Co's definitely
so
changing.
No matter what,
Small
Co
let's
is
not
changing.
pretend to like.
Okay.
At the end of the day, they can call it a merger.
Nobody does that.
But nobody actually does that.
Yeah.
One person acquires another, like by far and away. And so, one, let's not pretend that. We will never pretend. Two, that doesn't minimize the fact that there was value in Small Co. once upon a time. And so, how do you leverage whatever that value was and I don't know, pacify isn't the right word, but it is in service of driving the integration in a way that's not going to be painful for everyone. I mean, we're dealing with a Big Co right now who they were like, yeah, we're struggling. We're all speaking, like we're saying words and they mean different things to different people. And we bought this small because what they had to offer is exactly where we need to go in the marketplace.
Sure.
Makes complete sense. And they are not used to having to play by the big boy rules. And so it's an acclimation process and it's how do you accelerate that? Yeah.
All right. So a couple of things I want to talk about then. Mm-hmm. We have talked about, and I've steered you into this box. This stuff matters post-closing to most people. Mm-hmm. Right, because it's Big Co. Big Co. is left with a problem.
Yeah,
but why would we care pre-closing? And not from the buyer's perspective, from the seller's perspective.
Right.
I am 12, 18, 24, whatever months out from going to market.
Yep.
I don't have an LOI signed. I don't even know who this Big Co. is. I was just going to
ask, do you even know?
No, but so why do I care, or do I care about any of this culture kind of stuff, leadership kind of stuff beforehand?
Yes.
Why?
As a business owner, with all due respect, if you don't care about leadership and culture at any point in the trajectory of I would argue we should have a conversation.
Okay.
Second of all, and so
I'm going to get feisty. I'm excited now.
And because it is fundamental to your performance, your leadership behavior drives organizational behavior, and those behaviors is what's driving your outcome. And
all right, so I'm going to play devil's advocate for you.
Bring it.
I am willing to bet that I could get you to say you have a culture whether you define it or not. Mm-hmm. Right? So
because everybody says that.
I'm going to call me Bad Co now, right?
Okay.
Like, so we have Big Co, we have Bad Co, not Big Bad Co.
Yep. You can be big.
I made Alan laugh. That's good. All right, so Bad Co. Let's say that financially they're performing really well. Mm-hmm. Bad Co is humming along, dropping 10 million in EBITDA, doing like really well.
Yeah.
They have a super shitty culture.
Yeah.
I didn't say that word.
It's okay.
We're gonna beep that out afterwards. They have a terrible culture.
An unfortunate culture.
But they have a great product or great service or what have you.
Yeah,
so
it happens all the time.
The market potentially looks at this and prices this asset based on the fact that they're this growth rate, this industry, this margin number. Mm-hmm. So I ask again, if I am the founder of Bad Co.
Why would I
with
care?
Bad culture but lots of cash flow?
Yeah.
Why do I care?
Again, it gets back to what's the investment thesis and what's going to happen after you meet transaction, and are you actually going to be able to get your team to get all the way to transaction if your culture is that unstable? So
I just heard you say surety of close.
Yeah.
So potentially working on culture and leadership issues, even if Bad Co. CEO founder does not care.
Correct.
Getting to that check.
Yeah.
Getting to closing potentially is a more direct path.
We've seen some really rocky roads to close.
Yeah.
And it is often as a result of leadership and culture.
Okay. So let's talk through those two then. Leadership versus culture.
Okay.
I'll continue to be Bad Co. here.
Bring it.
If I can only pick one to work on, Which is it?
Leadership.
Interesting. Why?
Because it's going to drive the culture by association.
All right. I feel like I walked into that trap. All right. So higher leverage move is leadership before culture.
Yeah.
And
that's
linked.
what people are looking at.
Okay.
Right. So also from an evaluation and from a valuation standpoint, 9 times out of 10, the people who are buying are going to look at leadership before they look at culture.
Sure.
Especially based on our research. They're like, yeah, that's nice. But they're going to have a management meeting. They're going to want to gut feel. We're good to go. I feel comfortable about this company and what I'm inheriting.
Sure.
It's like this person understands how to drive a great company.
Sure. Okay. So this is a good segue to a question that we have here.
Oh, great.
Somebody has asked us, how can you deal in advance? What can you do in advance of a deal? Sorry, I kept saying that backwards. To assess the gap between two cultures. So now let's say Bad Co and Big Co are doing a deal.
Yep.
Throwing off plenty of cash flow. Big Co still wants to do something.
Sure. They want to understand the risk.
I'm not so bad that I have 99% turnover, but
it
I'm
might
still
be
Bad
in
Co.
like the 50s or 60s, and that's unfortunate.
So how do you start to assess that gap and quantify it?
Lucky for the marketplace, we have a proprietary leadership and culture due diligence
It just
process.
so happens.
Just so happens. We have put together a set of 10 factors that we evaluate from a leadership perspective. And then similarly, we have, and I think we might have a slide to show the folks on the call there. There we go. And then we have a set of similar kind of what's the orientation of the culture.
Okay.
And it's always tied to what is the desired or what is the outcome. So if it's Big Co, we're measuring against, or is it your own culture and what you say are the cultural norms?
Okay, got it. So if we look at these 10 things here, innovation, authority, et cetera, any that are more important than others, how do we start to think through priorities?
It all gets back to what are your strategic objectives, right? So it all maps back to what do you care about as Big Co or as Bad Co, and then what is the outcome you're driving towards? Got
it. All right. So that starts to answer the question on how do we measure the gap between Big Co and Bad Co.
Yep.
We work through this process. You have, some sort of deep dive stuff you go through to get from here to there.
Indeed.
But back to this pre-closing idea. Our goal is to position for a transaction and position for a bigger transaction.
Right.
Do we start to prioritize any of these things here?
Yes. Depending upon what the results are, we will then because the impact it'll then have on the investment and the outcome. Presumably from a leadership, you're going to be looking at, are they driving results? Are they building alignment on their team? How are they communicating with the team?
Yeah.
Acting decisively is by far and away one of my favorites. A good leader if they're going to take action and move on it.
Yeah.
And that the team's going to be ready for those types of, and if that matches with the culture of New Co, then all the better. Similarly, from a culture standpoint, if one organization is very collaborative and the other is very independent, that's going to be something that's going to erode the ROI, because people who like to work independently get really frustrated when they have to bring other people into the team. And if somebody who's used to having a mind melt happen and then they have to go do things on their own, they're going to be like, I'm stuck out on my own. What do I do? This is scary.
Yep.
So it's not that. The philosophy Conscience Strategies takes is there's no right culture, there's no good culture, bad culture. There is culture. Owning what you want your culture to be.
Yeah. Interesting. So what I'd like to go through, one of the next things we're going to talk about is cultural alignment.
Yeah.
What does that mean?
Just what I was just talking about. It's how we do things.
You got to break it down for us slow people.
Yeah. So it's how you do things on a day-to-day basis.
Okay.
How are decisions taken?
Yep.
Who makes a decision? Do you have leaders very hierarchically, or is it that associate who just started working here has leadership traits, we're going to really leverage that and build that in? Or we're really work hard, play hard type organization, whereas there's another place that we're 9 to 5. We come in, we do our thing, and then we go home and everybody has a wonderful dinner with whomever. Right? So two very different cultures. And so that's where you see gaps and
Got it.
intention.
So I want to back up. One of the other phrases that you mentioned before, and I just don't want to lose the thread, loss of agency.
Yeah.
Let's talk about that.
Yeah. For an owner.
Yeah. So, and first let's define, what do you mean by loss of agency?
So a business owner is used to having a lot of agency over the future and the outcomes of the day-to-day.
Yep.
And then they get bought, and there is could be tremendous loss of agency depending upon how the transaction goes down and the agreements that are taken.
Sure.
And if you take a view pre-transaction of, okay, here is the worldview, here's the vision, and I actually really know really well what I want to do and how I want to be, then you can work to ensure that that's part of the transaction.
Yeah. So, okay, let's take that a step forward, though. So let's assume that this transaction, bad bad guy goes away, bad girl. I'm the bad guy today.
Yeah.
So it's a sign and close, founder leaves.
Wow.
So we are
That's
left
amazing.
with, I'll say, middle management
Awake.
that is continuing to drive this organization forward.
Yeah.
Loss of agency happens there too, right?
Mm-hmm. Yeah. We've had some, I'm going to say fun clients who have exactly that, where there was a significantly toxic leader who was then removed, and yet everybody left in the wake, even if they were brand new employees, still assumed this idea that the world was out to get them, and that they were just expecting, because they had heard from everybody else as part of their onboarding that the world is out to get you, and working here, you're just like, you're going to be gotten. And so overcoming that and being very intentional in how you integrate that wake of employee base into a very different way of doing business, whether it is different, strict, we'll call it strict, or different badco, it's still different, and you're still going to have like this disorientation by the employee base.
So I want to come back to your 10-point cultural analysis assessment here.
Sure.
One of the items that you have on here is flexibility.
Mm-hmm.
And where I'm kind of heading with this is, we have this concept of agency.
Mm-hmm.
We have this concept of flexibility.
Mm-hmm.
Those two potentially go hand in hand with me.
Yep.
How do we train for that? Like, how do we build the organization that is flexible, adaptable? People have a sense of ownership and pride of ownership and things, but still have, the agility to deal with change.
Well, that's exactly, if you have a more flexible and you have pretty, what I like to call very stringent, might not be the right word, but your accountability measures are on point, and you're driving the ownership, but you're ensuring that the accountability is keeping people on task. That's how you're going to ensure that people can stay flexible. So it's happening a lot right now with the virtual workplace.
Yep.
Everybody's like, I don't know when my people are working. Are they even doing any work? Whereas there are others who already had pretty strong accountability measures in place, that they were like, yeah, my people are out working, and I'm seeing the outcomes of the work that they're doing.
So this brings up a fantastic, not on topic bullet point here.
Yeah.
Our go to virtual, return to work world that we're in right now.
Yep.
How does all of this stuff get thrown into the mix of we had a company that was not virtual,
right?
It went fully virtual.
Yeah.
And now we're struggling with
we're gonna do hybrid, maybe. Yeah.
Which is a big decision.
Indeed.
But all of this cultural leadership stuff.
Yeah.
How do we think about that as we are trying to build towards a transaction? Any key decision points here, or thoughts that we need to be wary of?
Yeah, that's a great question. Give me 2 seconds. So it all gets, what are you trying to accomplish in your transaction? And then how are you going to bring your team along? I think one of the things that I always find fascinating is the secrecy around a transaction.
Talk about this all the time, yeah.
And how much does that benefit a team? How much do you allow them? And also, there's a return to work that's happening. There's, in the wake of COVID, there's a ton of turnover and just people realizing what's important to them.
Yep.
I think one of the things that would be really good for employers at the moment is to think about, okay, let's acknowledge that everybody on my team has had some sort of existential breakdown over the course of the last year and a half. And let's acknowledge that perhaps they're doing some navel gazing. And how do I take advantage of that to be like, no, what's important to you is what's important to the company, to get them to stay engaged and excited about the future of the company. Because invariably when we go in pre-transaction, it's always positioned in we're looking at the strategy for growth. How do we help this organization grow? How you always have to keep the what's in it for me of an employee in your mind. And so those are some of the things I'd consider.
So is there some strategic advantage embedded in these decisions right now in this like go hybrid, come back to work, stay virtual decisions? How do you start to think about that? Like I have conversations every day with, like literally every day with founders that are struggling with workforce, like attract and retain talent. And if I want to transact, most of my value is largely in the goodwill, in
the talent base, as it were.
Assembled workforce. So how do we start to think of strategic advantage there, and what moves can we make now that help us down that path?
I think some of the things that it would behoove founders to think about is, as you're evaluating other companies, what are they doing in return to work? How does that line up with what you're thinking about, what works for your team? 9 times out of 10, we hear that people really enjoy the hybrid. People like to be in touch with other people. We are human beings. That is the nature of who we are. And whether it's in the workplace or out of the workplace, it's important for that to be existent, and generally speaking, having some kind of interaction with people. I've also heard of organizations that, because of, I heard a great example, that there's an organization that's bringing everybody back full time, but they can't confirm whether or not people are have gotten the shot, and so they're going to make everybody sit at their desk in Zoom meetings. Even though they're making people, right? So I would argue that may not be the best option to really pull on your employee base and engage them in a way that's going to help them feel like they're part of a larger mission.
That seems like we're sending mixed messages.
For example.
Okay. So that's a leadership issue.
Yes. And it's a decision that was taken to try to be very compromising, is my guess, and stay within legal bounds, which is important. Don't put your organization at risk. But also, as you evaluate that, think about what's going to help your team thrive.
Okay. So let's change gears here a little bit. Let's talk about like what these assessments look like. So one of the things that we had kind of teed up here is, what does due diligence look like? So from a buyer's perspective, lots of finance stuff happens, contract reviews, there's all this stuff. But what does the leadership / cultural assessment potentially look like?
It is a combination of interviews and conversations, a little bit of facilitated workshops, depending upon how large of the leadership team is in the know. And then we like to do some observation, because human behavior, you can say a lot of things, but then how you go.
You say observation, I think you're like hiding behind a plant in a lobby looking at people. So how does that actually work? Like security cameras, or like reading Alan's email? If it's illicit,
it doesn't work, right? It has to be overt in order for it to work. So I will sit in a meeting and I will watch how people behave with each other. I will participate in a Zoom, and maybe I'll turn my camera off so it's less intrusive.
But a little easier there, right?
It's easier, and in some ways it's a little harder, but you can see things like, is a team all on camera and talking to each other? Are people primarily in the chat box? Are some on camera, some off camera? Is the person who's running the meeting pulling everybody in, or are there people who are like slinking on the side and like trying very hard not to be noticed? Right. So there's still things even in the virtual world that you can observe. That we then tie to, what do you say is the behavior pattern to identify some of those gaps.
All right. So from sell-side advisor perspective, everything that you just said sounds highly intrusive.
Sure.
And as the sell-side banker, am going to do everything I can along with my client to prevent you from doing your job.
Why?
Because it's going to take time.
It will take 3 days.
Time kills deals.
Okay.
I bet it takes longer than 3 days when we like work
You're
through all
right.
the logistics.
Fair enough. It can take 3
and
days.
calendar days from start to finish. Highly intrusive. We mentioned confidentiality. We do not want to let the cat out of the bag that this entire thing is happening until there's a high surety of close.
Right.
So convince me that I'm wrong.
Well,
why should I, as the sell side banker or as sell side founder,
think about doing this?
Yes. Why do I want to say yes?
There's
no ROI to me.
Fair enough.
Unless I have a big earnout, which is different.
I was gonna say if there's an earnout or if there's a transaction fee associated, I could see there being benefit, because if you want the surety of close, that's one reason. I would also argue that it doesn't actually impact the deal cycle that significantly. What are you doing? 2-week, 3-week deal room, potentially max 4 weeks?
It could take way longer. So I would say that market right now is 60 to 90 days in diligence.
Perfect.
We're probably not willing to have any of these conversations till the last 2 weeks.
Okay.
So
once it's already too far gone.
Yes.
Yeah. And I would argue you as a banker may want to pull it forward a bit.
Well, I'm still going to disagree with you.
Okay.
Again, I am vested in, and my client is vested in getting to closing.
Sure.
I do not want to have this happen. What I'm going to say is an intrusive event in my life on my company until I'm highly sure that we're going to close, which is like chicken and the egg, right? Because from your side, you're going to be the buy side right now. We want to do this before we sign on to this deal.
Yeah.
Feels like a big challenge.
Yeah. And it's not that intrusive. It's a few conversations. Maybe I'm on a few meetings. Nobody's really going to notice. Nobody's going to pay that much attention. And they're going to think that we're investing in a strategic planning exercise and that it's all in the greater good of the company.
All right.
And it's going to make the leader look good because he or she is taking that action to invest in the future of the company.
Interesting.
Because why would I want anybody to feel like they're not?
Yeah, so I get that. And I get how like you can orchestrate the actual day of event so it doesn't feel like what it actually is.
Sure.
But my sell side client is going to be highly reticent to jump into this.
Yeah.
So
and they're probably going to maybe spend 30 minutes with me, and that will be telling in and of itself. Yep. And the way in which they conduct the interview will also be telling in and of itself in terms of here's what you're investing in and here's what we're observing. Yeah.
So I guess the question that I would come back to is if we have done some sort of exercise like this far in advance. Like I think of like quality of earnings. Are you familiar with quality of earnings report? So anybody who's not, like going through a transaction, buyer will generally go through this whole rigmarole where they sort of audit company financials. Oftentimes, sell side does that and presents that to the buyer saying, look, we've already done quality of earnings. Is there a similar thing in your world?
Certainly.
What does that look like?
It's the same thing. It's the leadership and culture assessment. We do it for organizations. What's, I don't know, ironic, funny, is that we do this for all kinds of organizations, regardless of any sort of transaction. And then the reason we created this was because we were like, why are people leaving money on the table? And there has to be a better way to do a transaction. Yeah. And so certainly a year in advance, I think the general industry standard is to start exit planning 5 years out so that you can get yourself ready. So let's say 3 on average. Sure. Certainly to come in and identify would be a great thing for a seller to do to really get him or her ready.
All right. So I'm going to bring us to a close here shortly.
Because the benefit of doing it is because then you're ready for the transaction. You're not going to have like a gotcha. Oh, I didn't realize that was an issue and now I don't have any time to fix it.
All right. So that leads me to, in my work, working with founders who are preparing for a transaction. Yeah. Let's assume that that's 24 to 60 months in advance of the deal.
Yep.
Couple of years, right? We've got some time to steer the ship.
Sure.
What is the what's the trigger point to bring you in? Right. So if I'm working on this assignment, and generally like the stated goal is we need to make this thing worth more, which earnings growth and risk, we got to move the dial on those couple of things.
Sure.
And we have a small period of, glacially, geologically speaking, a small period of time, a couple of years.
Sure. To get this done.
When do we talk to you?
When you start thinking about selling your business. Okay.
In a world of finite resources and finite time.
Yeah.
Bring that down for me. What is like the trigger point where, okay, so I could either make you the first one in the door, or I prioritize some other things in front of you.
Yeah.
Is there something structurally, like, is it a time of year? Is it, January? Is it after tax season? Is it after I've had my kid? Like, I don't know. Like, what is the thing?
I think it's the aha moment that you probably want to exit your company.
Okay.
And I think that's the challenge, is that people don't have that moment until perhaps then they want to accelerate and be like, okay, I'm ready to get out.
All right. So a couple more questions then. I'm working with this company. I'm not sure if it's Badco yet.
Okay.
But what might be some markers that indicate that I should be talking to you or bringing Hannah in on an assignment?
You start to see divergent stories from different people.
Okay, yeah.
You can tell by looking at some of the earnings that, oh, that's curious. That looks like perhaps the supply chain might be a little bit funky, and perhaps the ops people aren't talking to the marketing people. And so therefore, I don't know, yada, yada.
Things, words.
Yeah. I would think... generally, for when it's Badco, the employee base is not, they don't hide it. And so it takes one or two conversations to figure out we may have a problem here.
Okay. What if the problem is the founder?
Isn't that usually often the case?
That's kind of why I'm asking the question.
Yes.
So as
a founder myself, I love the work we do, and it gives me lots of fodder for thought.
The one person that we probably cannot change in this thing,
correct,
is that person sitting in that seat.
Yes.
It is the immovable object.
Which is why the buyer needs to come in and say, we're going to do this thing.
All right. But we're like 3, 4, 5 years ahead of time. So
correct.
How do we start to work around that immovable object?
You bring them in. They need to be a part of it.
Okay.
And they need to see that it's going to add value to their transaction. It's going to make them look better. Oftentimes founders have that need to feel good about how they look to their teams, even if there is misalignment between their behavior and team under perceptions.
Okay.
And it's the earnout.
Okay. All right. So back to my sort of litmus test here, my matrix of when I'm bringing you in.
Yeah.
What would I be looking at? Now I'm thinking like metrics. Absenteeism,
turnover rates, productivity. Not everywhere keeps track of man hours,
sure,
but those organizations that do, you can often see when things are tied to the right places. In an observation standpoint, back in the day when people were actually in offices, you could tell how many people were hanging out in the kitchen versus at their desks at any given time.
Yep.
How much lingering happened after a meeting, those types of things to take a look at.
Got it. Okay. What else have I failed to ask you in this little interview here? Am I missing any points? I think we hit the high points on what we wanted to get through.
Yeah.
But what have I not touched on?
There's always more to chat about in this stuff, and I feel
like we hit it pretty good.
I feel.
All right.
This was fun.
Alan, how do you feel about this?
Did you learn anything?
We're getting a thumbs up from Alan. So.
Learned so much.
About me? God, I work for Badco. I didn't even know it.
I don't know.
Exactly. We got to get you a mic. We got to get you on the.
I'd love to know from the participants what was left out. What else? What's missing from the conversation?
We got a couple of minutes left here. If there's a question, pop in the box. What's the other thing I want to ask you?
I don't know.
Oh, I'm sorry. Just for you in particular, your company.
Yeah.
Types of firms that you work with. So you're here, DC market predominantly.
We are, but we work internationally, actually.
Okay. Typical client looks like what?
There tend to be mid-size organizations. We're industry agnostic, so it's hard to say that we work with any specific industry. We tend to work with the PE, M&A world. We have federal clients, and we work with a lot of prime contractors.
Okay.
And it's fun because we work with the government, and they always bring us in to work with them too, which people tell me is very irregular.
Interesting.
And so 9 out of 10 times we're coaching the teams of our prime contractors.
Interesting.
Or doing strategic advisor or whatever. We work with a lot of healthcare organizations, a lot of lawyers and law firms, and then other just organic growth along the way.
Cool. Well, it looks like we are out of time, out of questions.
Sweet.
Your contact information, if you want to get in touch with Hannah, is over here.
Please.
Here on our slide.
If there was anything that struck a chord you want to take issue with or expand, I'd love to have a conversation with you.
Sounds good. Well, thanks for coming. Really been a pleasure working through this today.
Thanks, Dan. This
and
was fun.
We'll talk again soon. I think our next one of these, Alan, are we in a couple weeks for this? A couple weeks after. All right, more to follow. Check the website, getvaluescout.com/events for the next events in the series. And we'll see everybody soon. Thanks again.